Hello and welcome to Crypto Weeklies. Today we are going to discuss about Ethereum and its token ETH, conduct machine learning based price forecast, accumulation analysis for ETH as well as regression analysis, summary risk, and wider crypto updates. So let's get started. The price of ETH right now is coming in at around 2590. Over the last 7 days declined by about 1%. Still a market cap at around 311 billion. If you look these numbers closely, Bitcoin market cap and ETH market cap, you'd notice that ETH's market cap is 25% of Bitcoin's market cap. So 1245 billion versus 311 billion. So roughly speaking, one fourth of the market cap of BTC right now. And in terms of the machine learning based model, this is the weekly price action of ETH in white, on which our machine learning model is trained on, based on techniques such as LSTM, ARIMA, and XGBoost. The following are the output of the machine learning model at a base case level. The price of ETH right now coming in at around 2590. The base case per the model for the remainder of year and early part of 2025 is between 2689, roughly speaking, $2614 and $2949. So that's the base case. That is, if there aren't any major bullish or bearish catalyst, this is the base case. If on the other hand the crypto is in a recovery mode, the machine learning based price forecast is between 2900, in a bull case till about $4700, which would correspond to its weekly all-time high sometime in March of 2025 at a weekly level. Previous all-time high at a weekly level was $4694. This is weekly average prices. In terms of the bear case, if the market on the other hand were to have a slump as we end the year, this is the Q4 of 2024, and in the early or the Q1 of 2025, if the prices do not have a favorable market condition, the price could see between $1734 and $2477. The purpose of this forecast is not to tell what will happen in the market tomorrow, that is, if the market will go up or down. Again, that is determined by several other factors. We have other analysis for those, but the machine learning forecast is exclusively the purpose is to determine what is the relative upside and relative downside based on historical data and machine learning methodologies. So the base case at a weekly level is week by week level is available in a tabular format over here. To its left are the three bear cases with 1, 2 and 3 standard deviation accuracy, and to its right are the bull cases with the same standard deviation model. In terms of analyzing the overall crypto sentiment over the last 24 hours, a lot of bullish news. The ones in green are bullish, so you can check out one of the Solana's bullish outlook. Again, over here news, Bitcoin leaving exchanges, being a bullish catalyst. Overall sentiment though is at around 51. This is the social sentiment related to crypto over the last 24 hours. And if you compare that with the fear and greed, is at around 48, that is at around neutral level. So social sentiment slightly better than the fear and greed index at this point. In terms of the word cloud, that is the popular narratives in the market right now. Over the last 7 days, you can see the bullish sentiment is back. The size of the word are represented by the number of discussions related to that phenomena. So for example, Bitcoin is discussed mostly. This is content scraped of YouTube and X related to crypto. Then again, then bullish sentiment is back again. Ether, which is what we are going to discuss today, and the other altcoins are also being discussed about parabolic rallies in October. And that's the nature of the market right now. Not much smaller narratives over here. So concentrated amongst Bitcoin, bullish sentiment, ETH, and buying related news. In terms of analyzing how Bitcoin and ETH are doing based on their relationship between their price and the 20-week simple moving average, this is the normalized risk model between 0 and 1, with bands of 0.2 increments. The lowest risk for when the when both Bitcoin and ETH are in this zone of between 0 and 0.2. Then the second is the relatively low risk environment. We spent a lot of time in this environment over the last 3 to 4 months. Since July of 2024, you can say most of the time Bitcoin and ETH have spent in this light green band, that is between 0.2 and 0.4 risk. Right now, again, Bitcoin risk is at around 0.37 and ETH risk is at around 0.3. So that means right now ETH risk is lower than BTC risk, and this is typically during the bottoming phases of the market. For example, May of 2024, even if you go back to June 2022 and November 2022, you would find similar occurrences where ETH risk is slightly lower than BTC risk. In terms of analyzing the longer term based gauge chart based model for BTC right now, 0.4 risk, ETH slightly higher at 0.53 risk, both are in neutral territory. That is in this yellow zone on their composite risk right now. That means the market is not too overheated, but it is not close to the bear market that we usually witnessed in the year after the post-halving year, like it was in 2022. So now that we have covered a lot about ETH, about the overall market, let's focus on ETH. First, we'll start with the heat bands. This is the polynomial regression based analysis. These polynomial regression based bands are wrapped around the weekly price action of ETH is in this line in white. The line, so that is the weekly average price for ETH, and the line in pink is the base case or the fair value of the polynomial regression based model. That means right now ETH's fair value per this model is at around $3,874. On top of this pink line are the 3 standard deviation bull scenarios, and on the bottom are 3 standard deviation bear scenarios for ETH. And again, each scenario, each line represents increment of from. So for example, if we consider the light yellow and the light green lines together, the price action stays within those lines about 70% or 68% of the time is within these bounds. That is the 1 standard deviation likely prices. At this point is the range is between $2,400. So that would be a $2,400 ETH would be at its 1 standard deviation bottom. On the other hand, the fair value at around $3,800 and the 1 standard deviation peak at around $6,400. You can see as these are growing functions, what was a 1 standard deviation resistance at around $3,500 back in early 2024. Today that resistance is at all the way at around 6,250. A similar resistance would be at that level because of the growing nature of this asset. On the other hand, again, you can see whenever the price is significantly close to the 1 standard deviation bottom, that is this light green line, historically speaking, that has been a great time to buy ETH, as evidenced by 2022 price action as well as 2020 price action. So in terms of the overall eventual topping scenarios for ETH, this is the 2 standard deviation upper band. You can say 95% of the time the price stays between this orange band. If we get rid of the 1 standard deviation once, for example, and if we go to the lower bound again, in this model, the orange and the green, you can see the price action stays inside this band for 95% of the time. There are some correct times the price exceeds to the upside, as well as sometimes when the price exceeds the downside bottom. The downside bottom right now at 2 standard deviation bottom for ETH is around 1400, 1,500. That would be close to what ETH could do in a hard landing scenario. At around $1,500 if the macro environment suffers a lot. On the other hand, if there is a mania phase in the market and ETH tops in the next few months, that eventually the top could be close to this $9,800 level, because as you can see right now it's at around it's actually about 10k right now. If on the other hand, if historically speaking, a couple of months ago, that is in August of 2024, that two standard deviation ceiling was at around 8,000. Now it's at around 10,000. So you get the idea. As if the eventual peak is pushed further, these bands actually have further room to accommodate the two standard deviation ceiling. So again, it's not a forward looking model. It's at a point in time. Right now the two standard deviation peak is at around 10k, and these models are updated every single day as we get more and more price information for ETH. And if you want to know how these are calculated, this is a polynomial regression, and then the trend line based on residuals. These other lines are calculated at significant regression levels. So that's about ETH on its regression based approach. In terms of analyzing the accumulation for ETH, the SMA model offers the shortest term likelihood of any mean reversion trade. Back in early September over here, on September 6th, the risk level were at around 0.17. That is the second best time to DCA per this model. Right now it's around 0.3, again somewhere at the higher end of this third best time to DCA. The key idea with this model is again a shorter term play in terms of identifying the shorter term bottoms as well, where the risk level is between 0 and 0.1. In this plum color over here, you can see sometime in January 2022 as well as June 2022, when eventually ETH had a bottom for this market cycle. Ever since that, ETH has been making higher lows and higher highs. Again, one could argue if this 1500 low and compare this with 2200 low, if this holds, that would still be a higher low. In terms of now focusing our attention to a DCA model, where it's a more one market cycle at a time, and identifying the one market cycle bottom and best time to DCA based on one market cycle at the time. For this model, the risk level is at around 0.19. That is the second best time to DCA ETH is in this blue zone. Definitely not the ultimate bottom that is captured by this plum colored line. Again, this is not some retroactively fitted model. You can also analyze the current price in respect to the historical price as well. Right now the risk level is again, as I mentioned, the second best time to DCA ETH per this model. Again, none of the content is financial advice. So that's where we are on its DCA pair. On the time weighted average price based model, again the key idea is this blue line, which is the time weighted average price. Based on this time weighted average price and the current price, this risk levels are calculated. Again, when the price is close to the time weighted average price or below the time weighted average price, that's when, historically speaking, accumulating ETH makes most sense across multiple market cycles. Again, as the asset matures, the price doesn't go close to this time weighted average price. I will give Bitcoin as an example. Again, if you see in this market cycle, during the bear market, ETH did go below the time weighted average price. Again, that was a great time to DCA. Again, if you look at Bitcoin, though, Bitcoin never made it to the time weighted average price this time. It made it very close the last bear market of 2018, and again before that in 2015. So as I would imagine, as ETH becomes more and more adopted, the relationship between the time weighted average price and the current average price could be similar to what Bitcoin saw in this bear market. But nonetheless, we can still ascertain how risky it is to and what is the potential risk reward of accumulating ETH at this level at around 0.51 risk. That means it's a 50-50 at this point. Accumulating or not accumulating per this model is at a 50-50. So if you were to summarize all the actions in one model, this is the, again, OHLC or open high low close based analysis. This is the 20-week moving average for ETH at 3k. 20-week is at 3k, and in terms of the 100-week and 200-week at around 2300, 100-week around 2250. And if we check the price right now is at around somewhere between those levels right now at around 2600. Let's check the price once more time, around 2575. So again, it's between these 20 week and the 100 week. And if we were to zoom it out, and again, instead of looking at one average at a time, we normalize the behavior of based the risk behavior based on all the three moving average, will get something close to this, where the summary risk for DCAing ETH at this point is at around 0.16. That means again the second best time to DCA per this model. And if you overlay the price over this, you can see that the last time where the risk were this low was at back in close to zero, where in June of 2022, when the price was sub $1,000 for ETH. Again, this is one way to summarize our discussion. Again, this second best time to DCA per this averages based model is close to what the DCA model says. I know the time weighted average price model does not agree. It's at 50% risk reward, and the other model, the SMA model, is at around 30%. That is 70% reward, 30% risk. So with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel and also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.